Alrighty, folks, we have had a large move in the 10-year note. 10-year note has ranged from being up 15 to up 18 basis points. I know I have said it before. You might stop believing me, but these movements in a single day, in a single hour, are not normal. Trust me. I've been looking at this for 30 years, and these violent moves, either up or down, are not normal, but they are here. We're going to talk with Matt, the mortgage guy, talk about what's going on in lending. We can talk about the spread. Is it getting better? Is it getting worse? All things rates. Matt, what the heck is going on with rates today?
Yeah, so first and foremost, I think me and you probably agree on this, Mike. One rental at a time is purple. It's a mix of blue and red. Democrats are investors, Republicans are investors. So you won't ever hear me being political on this channel. But it's interesting to talk about with a newly elected president, like how that affects real estate. I read something this morning, Mike, that the 19 basis point jump on the 10-year was actually pretty calm compared to what it would have been had it been a clear like red sweep. So if Donald Trump wins the presidency, they have majority in the Senate. The House is still kind of undecided whether or not it's going to go majority.
So just clear, because again, I think I haven't looked in detail, but I've heard we might be a week away from having an answer on the House. What I think you're saying is if the House goes red also, we might expect rates to go up even more. Is that what you're saying?
Yeah, or at least that sudden reaction from the mortgage bond market would have been even more dramatic than.
Okay, so basically the mortgage market or the bond market, I guess in this case, the bond market was not anticipating the outcome. That's the only way you get a violent move like this is they were surprised, right?
Yeah, well, I think they're probably surprised, that there's the sweep. But from the stuff I was reading, and again, I'm not an economist. I'm just a mortgage guy, right? I'm reading this stuff at a 5th grade level, where some of it was baked in, but the red sweep definitely wasn't. And so the fact that it's even possible, and even if we're a week out from deciding, the House, but one thing that people should think about, and what I'm thinking about from a mortgage standpoint, is the more uncertainty we have, the more volatile rates are. As we kind of move forward and, new president into office in January and whatnot, like that should calm volatility because there's more certainty. There's no longer uncertainty about who's our next president. There's no longer uncertainty.
Well, that is so interesting because, again, for the longest time, I've believed that the mortgage spread, which is certainly down from the peak, but certainly nowhere near normal, right? Normal is 175, 185 basis points. We're still at 260, 270. I would have thought, and again, I'm just a guy that looks at the market every day. I don't pretend to be a PhD in this stuff. I would have expected the spread to come in. And to your point, I think the surprise might mean, at least in the short term, it actually widens as the
I think that's possible. Yeah. And so much of this stuff too, when people talk about, the Fed cutting rates and rates coming down and the spread getting smaller, I still think it does eventually. But yeah, maybe in the short term, there's knee-jerk reactions. Money's moved between, mortgage-backed securities and other places where people can stuff investments. And so, short term, maybe a little bit volatile, but in the long term, I think less volatility and downward trajectory of rates, one of those pieces being smaller spread between the 10 years. What are we, like 450 and 713? Yeah, it's like 260 basis point spread. And that for sure is wider the more volatility we have.
No question. No question.
And so less volatility, that can shrink down to 2%, even below 2%. And, that's quite a bit of relief to mortgage rates if you're talking about, 60 to 80 basis points that rates could come down. And so, interesting times. And it'll be interesting to see. One thing I know me and you track kind of just through conversations is consumer sentiment. So many people, some said it, some didn't, were like, I'm going to wait until after the election. I don't know if I want to buy yet because I'm uncertain about the future. Now that that's over, will more demand come back to the market, and it's yet to be seen, right? Like,
well, let's play with that. I mean, again, in the 6 hours we've had to react to this, whatever's going on, waiting's been expensive. Right? Rates are up quite significantly. Now, again, they could reverse tomorrow for whatever I know. But again, just looking at the trend's not great. The other thing that I think is really clear to me is we were getting really close to potentially cracking the move up buyer, right? We got as low as 6.1. I think anything in the 5s starts to dribble out that marginal supply. No, dead, buried, last rights, not happening at 7, and certainly not happening at 8. If we go to 8% mortgage rates again, whoo, that move up buyer is frozen.
Yeah, frozen for sure. And so yeah, just like the time of year, rates going up, buyer uncertainty, all those factors can work against buyer demand. We could have multiple factors working for buyer demand. More certainty. Rates starting to come down, and so next spring could be
could be a night and day difference.
Right, and I expect it to be a lot different than we're seeing right now. But for buyers and for investors, you don't want to wait until everybody else thinks it's a good time. You go in when there's blood in the streets and sellers are panicked because they've been on the market for 104 days.
Yeah, I love all of that. And again, I've been telling everybody that we're in a buyer's market, and the buyer's market's only getting stronger. There are people that have to sell. There are people that have to sell this year. We are 8-9 weeks away from the year being over. If you are lucky enough to be in a position to buy, write disrespectful offers, follow up, do the work, write offers that make sense at 7.5%, 8%, just so you have protection in your conservative. The buyer makes the deal. The seller can list it whatever they want. It's not until you have a buyer and an agreement, a deal is made. So look at the days on market. Watch the stuff that's aging. Watch the stuff that's imperfect. Watch the stuff that's not staged. Watch the stuff. There are signs, and you can do amazing deals in buyers markets. Some people have to sell.
Yeah, 100%. And something for people to consider too is like, there's no way for you to know kind of under the surface level of a market without being involved. If you just, casually listen to real estate podcasts and you're like, I'm going to go out and submit an offer. You might go out tomorrow and submit on something that's turnkey, beautiful, great neighborhood, been on the market for 2 days. And you write a 540 offer on a $600,000 listing, and you'll get laughed out of the building because that's not the stuff that sells at a discount. Right. And every market's different. So you have to put in the reps to actually know what that's like and have an agent who can educate you and write those offers, talk to the other side and say, listen, this just went on 2 days ago. They've already had 14 showings and 3 offers because this thing is turnkey. This is going to sell at a retail price because a buyer can just move into it. Then on the other side of the spectrum, the realtor goes, they've been on 88 days. I talked to a listing agent. They have to sell this thing. They're getting ready to do another price reduction. If they do that price reduction by 20 grand, they're sure it's going to spur some, offers, but offer them that price today before they pull other buyers in, and you can probably get it because they've already paid 2 mortgage payments for 2 months. They're in Tennessee already. And, I don't see there being any way for buyers to truly understand, kind of get a feel for the market without, 1, being involved themselves in submitting offers, and 2, having a great agent who can, talk to them about conversations they're having, things they've seen other clients do and not do, what's winning, what's not. I have those conversations, but, truth be told, it's the agent who's having the agent-to-agent conversation, who's looking at the details in MLS, who knows, this one was in contract twice and it fell out. They more than anything, just want something that can close in 15 days and get over and done with this thing before the year's up. And so it's like anything, Mike, like any business, there's pros that study it, practice it, and are good. And then there's casuals who just come by and they're just like, they think they're going to learn real estate investing in 9 minutes. No, you got to shoot a couple shots before you make the basketball team.
Yeah, there you go. Well, let's take a question from School. You are a member of School. Felix, this is for you. Both Matt and I have replied, but I just wanted to get this on video for Felix and anybody thinking about this. So the highlights of the question were, he's been offered an FHA Streamline. Obviously, an FHA Streamline is a accelerated path to refinancing. In this case, the rate would go from 6.875 to 6.375, a 50 basis point savings. Their payments would go down $71.26. That would be a savings of $855.12 a year. Unfortunately, Streamlines aren't free. This particular offer wrapped in $9,621 in closing costs. So quick math says this is somewhere between 10 and 11 years of a payback. I don't know about you, Matt, but I scream, do not do this. It is a bad deal. What say you?
Right. Yeah. I replied in there after you did, and I said, it's a no-go. There's one winner. The one winner is the guy who gets a check 30 days from now, who writes the loan and gets a commission on it. But what you have to look at in those scenarios is like the payback and how long you're realistically going to be in that loan. FHA loans, for the most part, are short-term loans, right? If you've got dinged credit, if you got to stretch your DTI, if you've had some sort of event, foreclosure, bankruptcy, like FHA is more flexible than conventional. But what they do is they attach mortgage insurance that will not fall off, right? The latest FHA stuff, like your mortgage insurance won't fall off until you refinance it. So most people, you're in that 6.875. When you've got enough equity, when you've got, your credit up 720, 740, you refinance to 599 conventional. And not only do you drop the rate, you get rid of the mortgage insurance.
Mortgage insurance, exactly.
And, I don't want people to look at this and go, 6 to 8, 6.3, it's not enough of a spread interest rate. That is not the whole scenario. I can do rough math in my head, Mike, and it's probably about a $200,000 loan. If this was an $800,000 loan, we could probably get more credit from the lender, cover some of that cost, and then you're saving $400 a month, and there's $6,000 in cost. Then it starts to become something where the break even might make sense. But for this specific case, you don't add an extra $10,000 to your loan, because that's the thing about Streamlines is you're going to pay the upfront mortgage insurance premium again. You might get a refund of partial of the old one, but this is honestly what online lenders prey on, Mike.
This is the kind of preying in body shop and dial center that makes me sick. This does not help the individual. This gives some schmuck on the phone a commission check in 30 days.
And unfortunately, buyers just hear lower rate, lower payment. And they don't look, I owed 192. Yeah. Day one of this new loan, I owe 201,900 or whatever that number is. Like you don't do that, because then what would happen if he did that? He's going to lengthen the time before it makes sense to do conventional.
Yes.
20% equity and remove mortgage insurance. And so there's very little chance you're in this loan for 11 and a half years or whatever the break even is. So it's a no-go, Felix. I appreciate the question and the comment. And, for 67 cents a day, you're in school and you just saved yourself thousands of dollars. You just saved yourself about 30 years worth of school payments.
No, and this is why we're in school. This is why you're there. This is why you do monthly calls. You're the mortgage guy. You do monthly calls in the community, which I appreciate. Again, you can always go to greatmortgagebroker.com directly. You can go through School and just tag Matt. He's in there, Matt, the mortgage guy. Closing thoughts and pretty exciting day.
Yeah, I mean, closing thoughts are, I think that buyer sentiment around the economy, around real estate, around a lot of things is going to pick up. Because, just the fact that there's more certainty, there's not all this drama of the election. We are all getting 20 friggin' text messages a day from either side. Right. And so with that behind us, I really see 25 and 26 being good years for real estate. but I don't want that to stop people from doing the work over the next 3 to 6 months. The best deals will be had in the next 3 months.
No, that's exactly right.
Yeah.
The people that get the deals done today, the people that write the deals that make sense today, you're going to get discounts and credits and repairs. And when you find that motivated seller, you've won. You've won.
Right.
Just do the work.
They almost cracked me on a personal experience where I had a fourplex for sale. They almost cracked me at a price that would have been just giving the thing away. I ended up not selling. I put together a creative deal, which is another thing, you know, with Ty in the community and other people in the community that are really good at creative stuff. There's gonna be massive opportunity for that.
Well, that's exactly right. I go back. I mean, I actually spent I think I spent $200 buying Robert G. Allen's original first edition creative financing book. I forget what it was called, like Creative Financing for the 80s. It was written in 81 or 82 because I wanted to see what the original creative finance guys were doing, right? Not the 15th edition that's been updated.
Right.
So, yeah, it's going to be wild the next 3 to 6 months. So, Matt, you're amazing. GreatMortgageBroker.com. Worst case, go see what you're doing. Go see if it makes sense. But always get started, get prepared. Matt is the guy. Thanks, buddy.
Thanks, Mike.